Please skip this video if you already know you want to buy an ELTA and you really love Clementi and you know that this is the project for you. So in this video, I'm going to share with you a bit of my insights on how ELTA is going to be as a launch, and then most importantly to compare with recent launches and how the pricing is going to be, how your entry and exit is going to be, and how's your future demand and any future changes as well. So first up, the Orie by CDL just sold 86% of the unit just a few weeks ago, averaged $2,700 per square feet. But how does this news actually relate to ELTA is something that I want to share with you today. The reason why I say that if you really love ELTA, you love Clementi, and you know that this is a project for you, you better skip this video is because based on Orie, based on the other new launches that launched for the past few months, we know that if you do not have a good balloting number, you want to buy also cannot buy. Okay, so today what we're going to run through is number one, Orie versus ELTA. Let me do a bit of comparison and analysis to share with you how I see between these two developments. Number two, some price trend comparison and also how Clementi have grown over the years. Number three, resale price comparison for both sale and rental. And then number three, understand how developer actually price the unit, especially for high-rise development like this. Number four, the entry and exit for ELTA. And lastly, what would your strategy be if you're someone looking to enter this development? Before I start with the price analysis, I just want to share with you guys what I hope to achieve through doing videos like this. So firstly, of course, I'd like to introduce myself to you and how I analyze properties, how developments price their property, and how actually different developments have different performance over the years, and how I actually select developments and units for my clients. Number two, especially in 2025, when going through the balloting process is so emotional, the hype is so real, I really hope that through this checklist that I share with you, you can actually walk out from this emotion and make the best decision possible. Number three is also to open some doors for you guys other than ELTA, because sometimes when we are just looking at one development, we might be blinded by our choices and end up overpaying. So number four is to highlight both the pros and cons for ELTA, and lastly, like what I mentioned, do not overpay for your purchase. So I'd like to repeat this, and I say this in almost all my videos. All developers are out there to sell their units, and most importantly, they want to make money from buyers. So as buyers, we really need to learn to protect ourselves and also know that other than helping developers to make money, we need to make sure that whatever property that we buy can potentially make a good profit for us as well. If after watching a few videos and you feel that you like how I look at property and how I analyze developments, do help me like, share and subscribe to this channel. Now let's start with the first one, which is comparing ELTA and Orie. So let me explain to you why I'm doing this, because ELTA is also going to be a high-rise development of 39 story. As we know, Orie is a high-rise as well. But the thing is, I think you'll be asking me, it's not a fair comparison, right? Orie is in Toa Payoh and then this is at Clementi. One is OCR, one is RCR. I don't think it's fair. So let me share with you why I'm using these two as a comparison. You need to understand that Clementi is very near to the RCR fringe and we are almost located like a RCR. So I did something for you just to compare. So I searched from Gem Residences, which is just beside Orie, to Raffles Place, which is our CBD area, versus the Clement Canopy, which is just beside ELTA, to Raffles Place MRT station. So as you can see from here, Gem Residences is 40 minutes drive to Raffles and about 11 kilometers away. So for Clementi to Raffles Place is about 15 minutes drive away, and distance wise is 13 kilometers. So if you ask me, is it a fair comparison right now? I think in terms of the proximity to the CBD area or to the central area, is actually very close. And that's exactly why, regardless whether it's a HDB in Clementi, a condo in Clementi, it always commands a higher price compared to the other OCR developments or OCR HDB. Okay, but please don't argue with me that when you go and Google and you check and you realize that the timing to drive there is maybe 20 minutes or 25 minutes because I did this Google search in 10 PM. Of course, the traffic is lower, right? But just for comparison, just to show you the distance between these two developments to the CBD area. Alright, so now I'm going to show you a table that I tabulated. So from Orie, what we want to learn is how the developer actually load the premium on buyers for units that are on different level, different facing, and different unit types. This is an estimated figure that I got on the first day when the price list was released to the public. So these are all excluding your agent purchase, your bulk purchase prices. So there might be a bit of difference when you really look at the data, but it's quite close. For the Orie, the estimated price range was 2.39k per square feet to about 3k per square feet. So over here, I'm trying to understand how much more did some of the buyers pay compared to the lowest price in the development. Because it's a 40-story development, we'll definitely see a price jump between each level, and the higher we climb, you will see that the premium jump is a lot. Over here, you can see for the 1+ study, the gap between the lowest and potentially the highest is 300,000. 2-bed 1 bath is at 291,000, 2-bed 2 bath 259,000, 2-bed premium 349,000, 2-bed plus study 287,000, 3-bedder 451,000, 3 plus premium, take a look at this, 511,000, which is more than $500,000 already. And 3-bed dual key at 342,000, 4-bed plus study 449,000, 5-bedder at 529,000. I calculated a bit of the difference in the premium that each buyer are paying. So you can see the range is between 12% up to 20+%. So my question is, how come the premium is so different between each unit type as we go? Now we need to think like a developer. Today, if I've collected a number of checks, so for example for Orie, they collected 2,300 checks, right? At every application, actually the buyer indicated which are the unit type that I prefer. Is it a 2-bed premium? Is it a 3-bed premium? Is it a 5-bedder? So for example, if out of 2,300 checks, I have 1,000 checks of 2 bedrooms. So as a seller, what would I do? I would definitely look more premium in a 2-bedroom because I know that regardless how much I price it, more or less I'm able to sell the unit because it's very oversubscribed. But let's say if I'm a developer and saw that the demand for, let's say, the 3-bedder dual key is very low, maybe only 2 times subscribed or maybe just 1 time subscribed, I might not want to charge too much premium because I want my units to move. So from this, you can see very clearly which are the unit types that the developer actually lump the premium into. So for example, let's take a look at all the units with more than 20% of premium. So firstly will be your 1+ study. So the premium was 23.44%. To me, why? Is because this is the lowest entry price to a new launch in Toa Payoh, correct? You can buy a unit under 1.6 million. If you have a very good ballot number, you can buy one at 1.2 plus 1.3 million. So but the thing is, because the demand is high, that's when the developer actually lump more. So the difference between each other is actually 300,000. So my question will be, for the person that bought at 1.58 million or those that bought above 1.5 million, how easy is it for them to sell at this price in future? Because you see from this chart, at 1.5 million, I can actually buy a 2-bed 1 bath at 1.523 million already. Next, I go to the 2-bed premium at 20.53%. The gap is 349,000. Same thing, 2-bed premium, usually 2-bed 2 bath. Let's say you have a more spacious layout, is usually higher in demand. And then next thing you can see will be your 3-bedder. This is the 3-bedder, the 3-bedroom compact. But you can see the gap between this is 451,000. And then next will be your 3-bed plus premium at more than 500,000, and following will be your 4-bedroom with a gap of 552,000. So why am I sharing this with you is because in 2025, very likely that many buyers will pay more premium for units that are more popular or well sought after. So by understanding this, we can also know what's the limit that we should cap on and what is a good percentage that we should avoid paying. So you can see from here, anything between 13 to 15% is normal, anything above is actually additional premium already. So imagine at the ELTA launch, there's only 501 units. Let's say your ballot number is 600, 700. Right? Very likely you are going into the tail end of the launch already, meaning that this project is probably 60% sold, 70% sold. Meaning you need to be ready to accept a premium of 15 to 20%. But now that I gave you this chart, you can exactly see for 2-bedroom, 3-bedroom, 4-bedroom, what is the price difference that you will be paying. It's 200,000-300,000 or even up to $500,000. So the question will be, if you are able to find an alternative in the market cheaper than entering at the tail end of ELTA, would you consider? But of course, the location might be not something that you're looking at, but at least you know that you're not paying too much premium. So if you ask me as a buyer, what do I want? I hope that the premium is actually my profit in future, correct? Example, I hope that this 259,000, I hope that this 500,000 will be the capital appreciation that I can have when I sell upon TOP or after TOP. And this is my mindset. That's why whenever a buyer asks me, should I join the balloting of this project? I say yes, can. No problem, we can always join. But what if your ballot number comes at the tail end? What if you're going to pay at a record high per square feet in this area? Are you okay? I also ask the buyer, or I'll ask you, is this the only project that you want to own in Singapore? That you must own? And you will stay here for 10, 20, 30 years? If yes, then feel free. Pay the price or pay the premium for it, no problem. But I say, I try not to. But does it mean that even with 15-20% premium in ELTA, you should not buy? No lah. To me, I'm saying that these are just numbers that you can take back, you can discuss. If you still think that you believe in this development, you believe that upon TOP you cross more than 20, 30, 40% profit or at least break even, feel free to still go for a unit over here. So now we have understood how usually developers plan their pricing, how they actually choose how much premium to load on certain units. Now let's take a look at Clementi Avenue 1 or Clementi itself. For those of you that have already watched many videos or you have been in Clementi for a period of time, you will know that the newer condos over there is your Clavon, the Clement Canopy and Parc Clematis. So now let's take a look at their performance. So these are some of the TOP dates, the number of units and also the developers of such development. You can see that they are actually pretty similar. They're quite high rise as well. So let's take a look at how they perform over the years. Over here I have the price trend of Clavon, Clement Canopy and Parc Clematis. So for Clement Canopy, the average per square feet is at $1,894 per square feet, Clavon at $2,029 per square feet, Parc Clematis at $2,067 per square feet. So the highest per square feet that was done within these three developments, highest is $2,352 per square feet. So why are these numbers important? So for example, when the ELTA price is going to launch, you need to know, how much premium am I paying above resale property? How much am I paying above the average per square feet? And am I actually buying very close to the resale prices as well? Over here, I plot out the resale growth of these three developments since Clavon launch, because Clavon is the youngest over here. So you can see a very interesting trend over here. So Clavon have grew 23.27%, which is pretty normal because it's a brand new launch, right? So Parc Clematis, even though it's a resale property, but it also grew to 27.59%, and the Clement Canopy actually grew 27.37%. To me, this is a pretty interesting data because we always say you must buy new. When you buy new, you make more. But the fact is, when we look at Clementi or we look at these three developments, actually all of them are growing about the same. So now you ask me this question, Jackson, okay, since you talk about balloting luck, you talk about maybe I cannot even get a unit, so why not I just go and buy a unit in these two developments or one of these three developments in Clementi? So I need to share with you, even though they had the same growth over the past few years, but the cost of owning each is different. So for example, for Clavon being the newest, during 2020 to 2023 or 24 is actually running through progressive payment. But the rest of the developments are likely to be running on your normal payment, your normal amortization charge. So even with the same growth, but your returns will be different. So what will be the difference? So number one, your remaining tenure will be different. That will definitely affect the valuation. Number two, the interest that you're paying per month will be different. Number three, for resale property, you will need to pay stuff like your renovation, your moving fee, your furnitures, etc. And also, the other two things will be your property tax and your maintenance fee for your resale property. Now I'm going to give you a comparison between a new launch, a progressive payment versus a resale normal payment. So you can see from here, for BUC, if you were to buy a 2 million property, okay, assuming we take a 75% loan, which is 1.5 million, your projected growth, to be fair, I'll put at 5% each for both resale and new property. So your estimated gross profit for 2 million property will be $315,250. Okay, assuming your BUC interest to be at 3.22%, your resale interest to be at 2.55%. But you can see from here very clearly under other expenses, right? If you buy a BUC, the maintenance fee is zero, your estimated property tax is zero, your renovation is zero, your furniture and fittings is zero because it's not completed yet. In comparison, a resale property, your maintenance fee, let's say about $400 per month, you'll round up to $14,400 for 3 years. Your minor renovation, assuming very small ones, minor touch-up, about $20,000. Furnitures and fittings that you need to buy in, you need to shift into about $10,000. And then your interest gathered will be about $110,000 over the span of 3 years. But in comparison for the BUC, because it's a progressive payment, you pay progressively, the interest that you gather over 3 years is only about $62,000. Because of this difference, you will see that the BUC actually have a total expense of about $62,700, but for resale it will be $183,000. So in summary, even though that both properties grew of 5% per annum, but your return of equity for your BUC will be 46.9%, but your resale property will be at 21.8%. If you are someone who is looking more in the investment factor or you hope to get the most return from your purchase, this is something that you need to be mindful of. So never compare to a brand new and resale property that are side by side unless you are very confident that the resale property will outperform a new property. Now let's move to resale performance for both sale and rental. To be very honest, I've always been a northeast, east side guy. When I look at data like this, it really gives me another perspective on how west side properties actually can perform. Let's take a look at Clement Canopy top profit, 2 bedroom, top profit at 398,000, 3 bedroom at 673,000. The 4 bedroom actually made up to 906,000. Is it crazy? To me, this is crazy numbers. But not so crazy anymore when we know that some of the ECs like your 100 Palms residences, they are profiting close to 1 million as well. But based on this chart, you can see that regardless which of the unit type that you own, likely your capital appreciation is between $500 to $600 per square feet. But in terms of annualization, you will realize that the 3 bedroom and 4 bedroom actually perform better. Now let's take a look at Parc Clementi's top profits. 1 bedroom did 204,000, 2 bedroom 432,000, 3 bedroom 732,000, 4 bedroom at 895,000 and the 5 bedroom and also the cluster did at 824,000. So for this development is pretty unique. You can see that the 4 bedroom actually made more profit than the 5 bedroom. So same data over here, the 3 and 4 bedroom actually did really well in terms of their annualization numbers. So it's very clear over here that in Clementi, many of the buyers that are buying over here are mostly for own stay. So as we know, Clementi, we are surrounded by HDBs, we are also pretty near town as well. We are also one of the most central west side estate in Singapore. So you can see that 4 bedroom, 5 bedroom, 3 bedroom, any units of own stay layout actually perform really well. For Clavon, the 1 bedroom did 232,000, 2 bedroom 341,000, 3 bedroom 604,000 and the 4 bedroom at 906,000. So now if you ask me this question, can Clementi make money or not? Can buying west side make money or not? I tell you, more or less in Clementi you can. But like what I mentioned, 2025 is different. Because for projects that come in, you don't really have the time to choose, you don't really have a choice to choose, you might pay a certain premium and such premium will definitely affect your future capital appreciation as well. Of course, if you buy low, you definitely make the most. So for rental, I'll only compare between the Clement Canopy and also Clavon because it's along Clementi Avenue 1. So if you are looking at rental rates, for ELTA, I think it's better to compare these two projects only. So far, we can see the 2 bedrooms can go up to $4,500 at Clement Canopy. For the bigger units can go up to 4.8k. So for the 3 bedrooms, it's between 4.8 to 6.3k. And then for the 4 bedroom, up to 7.8k. If you are someone looking to rent out in ELTA, you just need to look at this data. It doesn't matter whether you own a bigger unit or not. So the question will be, just take a look at the 600 to 700 square feet 2 bedroom and also the 700 square feet to 800 square feet 2 bedroom. You can see that the top rental amount is between $4,800 and $4,500. But the thing is, by owning 100 more square feet in terms of size, actually your rental yield might be lower because of your purchase price. But in terms of rentability, in terms of rental rates, the extra 100 square feet wouldn't give you extra rental by a lot. So if you are looking at rental yield for each unit type, I always say buy the cheapest because when the supply is low during rental, your rental rates you can call as high as the bigger unit. This logic works for the 3 bedroom as well. Next will be Clavon, the 1 bedroom doing up to 4,000, the 2 bedrooms 3,900 to 4,800. So same example over here, the top rental for these two different sizes of 2 bedroom is only $200 difference. And then for 3 bedroom between 5,500 to 6,500, this is even clearer. The top rental amount for either type is only 6,500, same. So for the 4 bedroom will be between 6,500 to 8,900. So for the 5 bedroom, the rental will go up to $9,400. As a landlord, how do we decide whether to invest in this area is actually look at the transaction volume. For both Clement Canopy and Clavon, you can see that every other month you will at least have 2 to 3 transactions per month for the 1 and 2 bedroom, and then for the 3 bedrooms at least 1 transaction per month, and then of course only for the 4 bedroom, maybe because of the supply shortage, because most are for own stay, you are looking at 4 to 9 units per year. To me, these are very healthy numbers, so as a landlord, not to worry. Like I mentioned, as a landlord, please buy as low as possible. After running through the resale performance for both sale and rental, I think now most importantly is we need to understand the entry and the price that we are going into for ELTA. So the red color line is actually the overall Singapore resale property price trend versus the Singapore overall new launch price trend. The average per square feet for condo resale is at $1,637, max per square feet of $5,397. So for the condo new sale, we have an average per square feet of $2,320 and goes up all the way to $6,100 as the max per square feet. What I'm trying to find out over here is the overall gap between the resale and new launch property in Singapore. As you can see from here, the gap is 33.86%. Moving on, this is the OCR resale versus new launch price trend and also the price gap. For OCR resale, the average per square feet is $1,500 and max per square feet is at $2,581. For the OCR new launch, we have an average per square feet of $2,244 and a max per square feet of $2,832. But something very interesting over here is that you can see when we zoom into the OCR, the gap between the resale and the new launch actually narrowed down to 26.01%. This means that if you were to follow this number and buy an OCR condo or OCR new launch at $2,184, your gap between a resale property is only 26% compared to the overall gap in Singapore, which is 33.86%. Now let me further narrow down for you. This will be your Clementi resale price trend versus OCR new launch trend. And to me, this number is crazy. Take a look at this. The gap for Parc Clematis and the new launch gap is only 7.89%, a difference of $177. For Clavon, the gap is 9.58% of a difference $215, and for the Clement Canopy, the gap is 15.6% and at $350 in terms of per square feet difference. So if you realize, based on these numbers, you can see that if I were to enter in Clementi at the average OCR pricing, or even if I buy slightly higher, $100 or $200 per square feet higher, you can see that my gap between my new launch and the resale property nearby or just beside me is actually very narrow, which makes the premium for a brand new property versus a resale very low. But of course, these numbers are only based on the average per square feet. Definitely, you also have higher per square feet within the developments, higher per square feet within the OCR trend. But this is to show you the numbers that we have in Clementi itself. This is a breakdown for you. From here, you can see that the OCR new launch, the average per square feet is about high 21 to 22 per square feet. And then the max per square feet done was actually 2.832 per square feet. But for the Parc Clematis, Clavon, Clement Canopy, each of them have a highest per square feet of 2352, 2320 and 1981 per square feet. So let's assume you have a super good number, super good balance number, or you are super lucky to be able to participate in the VIP, or you are an agent making a purchase, or you have a bulk purchase opportunity. If you can get a unit at 232425 per square feet, you are very safe. It's almost like buying a brand new at a resale price. Also through this number, you can see that Parc Clematis have break a quantum of 3.5 million, Clavon break a quantum of 3.3 million, Clement Canopy have break a quantum of 2.6 million. And overall in OCR, the highest quantum that was done was actually 4.9 million. In summary, for ELTA, if you can get a good balance number and if you are not emotional, you might be able to secure a very good price tag. So how much will ELTA sell for? So this is just a hearsay and this is an estimation. Low floor, you may start at 2324 per square feet. Your average of the development could be 2526 per square feet, and your high floor can go up to 2729 per square feet. So the gap between the lowest per square feet to the highest per square feet will be about $600 per square feet, which is exactly the same as the Orie. So the question is, if the Orie was sold at 24 to 3K per square feet, the ELTA is going to sell at 23 to 29 per square feet, can buy or not? Can we buy ELTA or not? Or those buy Orie, is it too expensive or not? From what I mentioned earlier in the video is that Clementi have grew about 33 to 27% over the past few years. So assuming that you are ready to pay a premium And like I say, you are not blessed with a good ballot number and you have to pay 15 to 20% premium, you just need to take note that upon TOP, you might not make as much as the rest, but can you break even? Based on statistics, Clementi, it's possible. But please be very mindful because these launches definitely have jump onto the COVID wave a bit. My prices have ran up quite a bit in COVID. So to me, a safe premium that I will put or to cap on is maybe at 15%. So do a bit of your math, how much is 15% premium? But if you're tired of watching so many ELTA videos, so many new launch videos, and you just wish for someone to break all the numbers for you and tell you what to buy, what is a good buy out there, and there's any opportunity out there, and you do not need to depend everything on ballot number, you can buy something that's existing in the market, feel free to WhatsApp me. Buying is easy, but is selling as easy as well? So the next question will be, after I buy ELTA, who will buy from me after I clear my seller stamp duty? So to me, in Clementi, you have two crowds that you'll be looking into. Number one will be your condo upgraders or downgraders. Just beside you, you have Clavon, you have Clement Canopy, and based on the profit, you can see they are making 400,000, 500,000, even up to 900,000 as well. So if you ask me for them to sell and to buy your resale property in future, will it be difficult? So let's do a bit of math. Let's take a 700 profit or 700,000 down payment for example. So if an owner at Clavon or Clement Canopy sells their property, they make a profit of 700,000. So what we do is we use 700,000, we divide it by 0.3, assuming it's a Singaporean normal buyer stamp duty, because 25% down payment and then an estimation of 5% for buyer stamp duty, assuming that the seller is taking up a max 75% loan. So 700,000 divided by 0.3, this is sufficient for them to buy a 2.33 million property. But do take note, this excludes their CPF saving, this excludes their initial down payment and other cash savings that they have as well. Let's take the top profit as example. 900,000 divided by 0.3, can see this 900,000 is more than enough to down pay for a 3 million property. Your next group of potential buyers will be your HDB upgraders. If you do not know, Clementi have one of the highest profit in terms of HDB, and also you can see that we have quite a few newly MOP HDB here as well. You can see from here, Clementi 4-room latest, Clementi Avenue 3 and Clementi Avenue 4. The top selling price is actually at 1.12 million and 1.15 million. Same thing, do your math. Back then, they were to take this BTO, let's say 8 to 9 years ago, how much are they buying? Let's say if they buy 400,000, 500,000, how much is their profit? And through that profit, how much can they buy for your next property as well? For the 5-room flat, you can see that the top transacted price for the 5-room flat is 1.3 million and 1.27 million. So do you actually have buyers that can buy from you? To me, safe to say, yes. You must be thinking right now that, Jackson, how come this price analysis video, it seems that you are telling us that ELTA can buy? Because the answer to me is yes, if the price is right. Because ELTA do provide a pretty strong resale support and also a good entry and exit as well. But like I mentioned, this is not the only project in Singapore that you need to go to. If there's other opportunities, I'll let you know as well. This is something bonus. This is something that you need to know about Clementi. Currently, our government is spending quite a bit of money in this cross-island line. And you can see that Clementi is actually one of the stations that will be the interchange for this cross-island line. And as we know in Singapore, as long as you're near the interchange, is always a good thing, right? But you also need to know that for cross-island line, currently they are building the first phase and you will currently stop at Bright Hill. And this phase 1 will likely complete only in 2030. So for Clementi interchange to happen, not so soon. But this is just something bonus for you to know. And most importantly, your strategy for ELTA. Before we can strategize, we need to understand the disadvantages that you have. Firstly, you need to know that there will be a group of people that will be buying before you before the public launch. These are your VIP, developers VIP. These will be your bulk purchasers, those that are buying maybe 2 3-bedroom, 2 4-bedroom, maybe a 4-bedroom plus 2-bedroom. And also, some of the developers do agents to have priority purchase. Some of the developers actually allow priority purchase for agents direct family as well. And that's exactly why I mentioned that if you can, try your best to find someone within your family, best is direct, to purchase a unit with you if you really love ELTA and you really wish to own a unit and to secure at a decent price tag. Number 2, which is something that nobody control and only will know, is your ballot number or your ballot luck. If you're going to place a check with me on ELTA, Parc Town, Lentor Central or whichever, based on your ballot number, I'll definitely tell you how to strategize and what are units to go for, and also to create some backup options just in case we don't get a unit over here. I'd like to shout out to a group of people that are entering this new launch market. So for example, if you're looking for a 2-bedroom, and let's say you have a budget constraint of let's say within 1.6, 1.7 million, and you're looking for a 2-bedroom, based on the Orie, based on past launches, we know that a 2-bed premium will cost you 1.7 onwards. Meaning that if you don't get ballot number 1 or you don't get ballot number under 50, the chances of you buying one is almost zero, right? So what I really advise is for you to explore some of the post-launch, even take a look at the resale properties, whether there's any good buy as well. Because the last thing we want is always to delay your purchase and always leave it to the balloting luck. And because of this, you clear your seller stamp duty later. And let's say touch wood, anything happen, hopefully no cooling measure or anything, your affordability is being affected, and from 1.7 you can only afford 1.6, 1.5. I think that's the last thing we want. So I always say, always be in the market, then time the market, or wait for things to happen. If today there's already another good development, there's another option that you can go for, especially for those with a budget constraint, do consider them as well. But if you do not know any of these developments, feel free to reach out to me. I have a list for you. Same goes to the 3-bedroom, 4-bedroom buyers. Same thing, if you are limited to certain constraint, but you need the size or you only want that certain type, same thing, explore other projects as well. Next up will be for buyers with no budget issue. You can buy whatever price you want and you just love Clementi. Same thing, before we throw our check down and we sign off the signature to buy the unit, right? I think really compare. Example, let's say if ELTA goes up to 2.9k, at 2.9k can I buy another development maybe with a better view, maybe that's better located, maybe it's a development that you have never explored before. So open up some doors, explore a bit, but like I say, if you are a Clementi lover, you want to be here, feel free, go ahead. Thank you so much for watching this price analysis video for the ELTA. I hope through these you can roughly grasp a few concepts or a few angles that I use to analyze property and how to choose certain entry price, and if I'm a landlord, what price do I want to get at. And these are the similar concepts that I use for other developments as well. So this video doesn't just apply for ELTA, apply for other developments that you're considering too. To be honest, these data or this research are long ready before this video is being released, because it takes some time for us to produce. Maybe there's a 1 to 2 weeks lag. For example, if you're looking for other developments and you wish to receive these analyses earlier, feel free to WhatsApp me. I'll have them ready for you already. My number and my contact is in the description. Reach out to me and then we'll discuss from there. So if you like what I'm doing here and you appreciate all the hard work that we have been putting in to bring such content to you, do help me like, share, and most importantly to subscribe to this channel. See you again in the next video.